Headline: Did insider secretly short Robinhood on Hyperliquid? Published at 6:51 p.m. April 29th, 2026. A pseudonymous researcher has posted a suspicious trade by a collection of Hyperliquid wallets that some crypto traders suspect of having a special relationship with Robinhood. Continuing a pattern of curious trades, the insider opened a prescient short on Hyperliquid's Hood perpetual futures contracts, crypto derivatives that mimic the price of Robinhood's common stock, mere hours before Robinhood's scheduled first-quarter earnings release. After its disappointing earnings, shares of Robinhood stock fell sharply yesterday evening, rewarding the trader's leveraged short in after-hours trading. Stock price chart of Robinhood over the past day. Source: TradingView. The traders at the center of the allegations are wallets ending in 177D, BC7B, ACF9, and their various sock puppets. They first transacted on July 16, 2025, and have gained attention from various Hyperliquid commentators. Critics claim that the trader gained advanced knowledge of Robinhood's earnings results this week, secretly opening a directional bet against the stock via crypto exchanges to avoid actual stock short sales that might have exposed them to greater regulatory scrutiny. Robinhood trading correlation versus causation. Thoroughly convinced of the accusation that correlation equals causation, a researcher posted a thread about wallets that were funded by Robinhood withdrawals that subsequently traded on Hyperliquid and MEXC wallets, ahead of Robinhood-related listing announcements. Even though funds for some of the wallets traced to Coinbase, the researcher emphasized Robinhood-derived withdrawals and Robinhood-related news to allege the insider and even employee frame, which is now circulating on social media. However, correlation doesn't necessarily equal causation, and the bridge between suspicious trading and wallets actually belonging to a Robinhood employee relies on thin evidence. SEC insider trading ban. Robinhood, like any public company, has a formal insider trading policy outlined in the company's SEC filings. The policy prohibits covered persons from trading Robinhood securities on material, non-public information, and from holding derivatives tied to the company's performance using such special information. Covered persons include employees, contractors, agents, and family members. Trading U.S. stocks while in possession of material non-public information is generally prohibited, including by law in U.S. statutes. The company hasn't publicly addressed the conclusory allegations on social media as of Tuesday evening. Neither have critics disclosed how their employee or insider designations were made beyond corollaries, like a suspicious series of events that could have numerous alternative explanations. Yesterday, Robinhood reported Q1 revenue slightly below a consensus of Wall Street estimates. However, the damage to its stock price resulted from crypto revenue year over year, which collapsed 47%, indicating dimmer prospects for growth. As a result, shares closed sharply lower in Tuesday's after-hours trading, closing at $74.41 by 8 p.m. New York time after opening the day at $81.55. Hood opened today's session even lower, at $72.30, down 11.3% in just 24 hours. Protos reached out to Robinhood for comment, but did not receive an immediate reply prior to publication. This audio is AI-generated. Got a tip? Send us an email securely via Protos Leaks. For more informed news and investigations, follow us on X, Blue Sky, and Google News, or subscribe to our YouTube channel.